Welcome to our market update for May 4th, 2026. Today, we are diving deep into the Nasdaq stock market to explore a critical question. Where will AI-driven momentum lead the index next? Is the sky the limit for AI? With massive movements in the tech sector, understanding the underlying cycles is more critical than ever. Let's uncover the hidden patterns of the market together and see exactly where the trends are taking us. Before we dive into the cycles, please take a moment to review the financial disclaimer on your screen. This analysis is for educational purposes only. Let's start by the 18-month cycle and the big picture. Currently, the Nasdaq remains in a very bullish trend, but identifying the crest of this 18-month cycle is paramount. The last major low for the Nasdaq occurred in 2022, marking the conclusion of the previous 54-month cycle. More recently, an 18-month cycle low was established in April 2025, representing the second 18-month trough within the current 54-month period. 12 months have elapsed since April 2025. While the Hurst nominal model suggests an average 18-month cycle length of 17.93 months, my proprietary spectral analysis indicates a current average of 17.2 months, still remarkably consistent with the model JM Hurst established over 50 years ago. Adding 17 months to the April 2025 low points towards September 2026 as the potential date for the next 18-month cycle low. Due to Hurst's principle of synchronicity, this will also coincide with a 54-month cycle low. Technically, prices typically peak at the cycle crest between 8 to 9 months after the initial low. Having reached the 12-month mark, prices are forming their peak on the right-hand side of the cycle, what Hurst called a right-hand translation. This setup allows us to anticipate a moderate correction, despite the significant 54-month cycle influence. The chart confirms that the Nasdaq is also peaking on the right side of its 54-month cycle, reinforcing the sustained bullishness of the tech sector. We will receive confirmation that the 54-month peak has formed once the Nasdaq crosses below its cycle trend line, or VTL. Furthermore, the first sign of the 18-month cycle peak will be a crossover below the 18-month future line of demarcation, FLD, represented by the yellow line. This crossing will not only confirm the peak, but also provide a downside target. The correction could reach the 54-month FLD, which is currently positioned near the $18,200 level. Let's see now the 40-week cycle. By identifying the first 40-week cycle low following the April 2025 trough as occurring in late November, we observe a duration of 32 weeks, roughly 6 weeks shorter than the Hurst nominal average of 38.97 weeks. An alternative scenario places the low in March 2026, which would extend the cycle to 52 weeks. While 13 weeks longer than the nominal model, the magnitude of the subsequent rally makes this the more probable scenario. This lack of clarity in identifying the 40-week low is likely attributed to market news. News affects cycles in two primary ways, by increasing volatility or by shifting cycle lengths. When traders anticipate or react to significant events, cycles can compress or wait for the news, causing them to run longer, as seen in the current 40-week period. What lies ahead? If the second 40-week cycle mirrors the first, the low would occur in March 2027, an unlikely outcome. If the market aligns with the Hurst nominal model, we can expect a low in December 2026. However, the most likely path is that the next cycle will be shorter to compensate for the previous extension, bringing the average back to 38.97 weeks. This points to a projected low in October 2026. We will monitor the 40-week VTL. A crossover below this line will confirm the 40-week peak and, more importantly, signal the formation of the next 18-month cycle peak. The March low designation is supported by the fact that after the $26,182 high, the Nasdaq crossed below its FLD at $24,740, providing a specific $23,298 downside target. By the last week of March, the Nasdaq hit a low of $22,841, successfully meeting that target. According to Hurst's principles, crossing back above the FLD in April at $24,758 confirmed the March through as a valid cycle low, also triggered a $26,676 upside target, which has already been met. This signal maintained a 100% success rate for the year. The 20-week cycle. Following the principle of synchronicity, the last 20-week cycle low formed simultaneously with the 40-week low in late March. In February, a crossing below the 20-week FLD at $24,750 projected a downside target of $23,318, which the market met and exceeded by late March. A second trading signal occurred in the second week of April when the Nasdaq crossed above its FLD at $25,394, providing an upside target of $27,946. Based on the Hurst nominal model, the next 20-week low is projected for the first week of August, with a peak likely forming in the first week of June. At this stage, we anticipate the Nasdaq will eventually cross below its cycle line to provide a new downside target. After finding a low in August, we expect a rebound where the cycle line acts as resistance before the final decline toward the last 20-week low of this 18-month cycle. To date, the 20-week cycle signals have achieved a 100% success rate. The 80-day cycle. By crossing above its FLD, the Nasdaq has confirmed that the March low is at least an 80-day cycle trough. On April 8th, the index crossed above the cycle line at $24,965, projecting a target of $27,089. By April 23rd, the market hit this target, yielding a profit of $2,059. The low for this 80-day cycle is expected around June 7th. It is vital for the future trend that the market finds support on its cycle line during this formation. We anticipate a peak on May 4th. If this peak occurs on the right side of the cycle, the subsequent correction should remain moderate. The first 80-day signal of the year in February successfully projected at $24,349, a target that was met by March 3rd. The second signal in April 9th at $24,965 for a $27,089 target met on the April 24th. Year-to-date, the 80-day cycle has provided two successful signals, a 100% success rate, and $2,963 in total profits. Finally, the 40-day cycle. The 40-day cycle produced its first signal on February 3rd with a crossing at $25,423 that met its $24,681 target for a $742 profit the following day. A second signal on April 10th at $24,965 reached its $27,089 target by April 24th, securing $2,124 in potential profit. This cycle also boasts a 100% success rate with total profits of $2,860. Looking forward, the last week all-time high in April likely represents the 40-day peak. In conclusion, thank you for joining this comprehensive Nasdaq and artificial intelligence cycle analysis. The momentum behind AI remains incredibly exciting, and as we navigate these cycle turning points, staying on the right side of the trend will be key to unlocking market potential throughout 2026. Make sure to click the subscribe button, give this video a like, and leave a comment down below with your thoughts on where AI will take the tech sector next.